Okay, today I'm going to talk about seasonality and volatility. Now, seasonality is sort of a catch-all phrase, and we'll discuss a little later. This is a heavily airbrushed picture of me in my youth. Actually, it's only about 5 years old. But just who I am, I've been trading for, I went down to the floor in 1984 after working for IBM in digital equipment in sales and sales management. And I was down on the options trading floor, trading in a pit, for years. I saw the crash in 87. I saw the advent of the .com or the NASDAQ stocks on the exchanges. I was there on 9/11. I've seen an awful lot of things, and I've lost money every single way you can possibly lose money. And that's where my experience comes from. That's, I've taken a beating, so hopefully you don't have to take a beating too. Okay? So that's who I am. Okay. Happy Dingus Day. I grew up in South Bend, Indiana, an Irish kid in South Bend, Indiana. Heavily Polish town. The Monday after Easter is known as Dingus Day. Okay? So it's a Polish celebration. Right now, the big places in the country are Buffalo, Hamtramck, Michigan, and Cleveland. It was a big political event. I remember seeing Bobby Kennedy in 1968. He stopped in town for a campaign. Lyndon Johnson. Hillary Clinton. This is a copy of a ticket my brother got autographed by Bill Clinton in 2008. And it's like a Polish St. Patrick Day. You go from the ZB Falcons to the MR Falcons to the West Side Democratic Club to any of the number of Polish war veterans places. And you eat Polish sausage. I think it's called galuska. It's like a noodle and cabbage. It's really quite a fun day. South Bend stops working on that day. So back to our presentation. Chance only favors the prepared mind. And that's a saying that I first got from my dad. He never told me that Louis Pasteur said it, but it makes an awful lot of sense to me. But before I go into that, we'll talk about the prepared mind. It's just common to high achievers across many risk professions. Fighter pilots, when they practice, they go and they debrief. And what it allows us to do is to recognize, decipher, and act across a complex set of conditions. And we'll envision opportunities where others see risk. So, firemen do it, policemen do it. Conrad Sullenberger did it when he landed his airplane in the East River. And so we're constantly visualizing alternate futures. What if, what if, what if? And that's, we all do that when we trade. I create a scenario in OptionVue. I go, well, will this work? Well, what if, what if, what if? Well, today we're going to talk about one of the what ifs. And in the absence of what ifs is doing the same thing over and over and over and expecting different results. And that's often been defined as insanity. So here's the hypothetical performance disclaimer. Everything I'm doing here is to teach, to explain a concept. Nothing I am doing is a trading recommendation. Please understand that. And that sort of nets out what this says. So I want to do some quick housekeeping. I found that every time I talk to people and I do a mentoring and I look at their trading platform, there are problems. And an important thing is that the entries in our trading platform remain constant from time to time. Now, Jeremy is recording this, and so you'll be able to go back and look at this checklist. But every time you open up your trading platform, and that includes an OptionVue, I want you to go through this exercise. So you need to know your trading platform and understand the source of all info. And this includes price and Greeks. I have talked to people that have their trading platform set on 15-minute price delay, even though they're getting current prices, real-time prices, and had it set there for months and did not realize. I mean, and I see how that can happen because I'm constantly finding mistakes I make. So, understand how to trade, where to trade. In OptionVue, you want to use the same option pricing model all the time. I use True Delta Gamma. Use that all the time. I do not combine SKUs. I do bid plus S divided by 2. That is how the OCC, the Options Clearing Corporation, and trading firms compute your net liquidating value. So, matrix default model, here it is again. Remember, you can click on model. I keep this at large and large when I define because we compute your implied volatility and delta based on all the number. The larger the number of options used, the more exact it is. Okay? So, quick housekeeping, but it's very important. Too many people make that mistake. Actually, the prepared mind, one thing I've been looking at today is for a huge chunk of today, the Russell has been down more than the Dow Jones. In fact, right now, the SPX, the S&P 500 is down. Well, it's down a little less than the Dow Jones. This is something you don't see very often. And when you do see it, it behooves us to ask, why is this happening? Okay? And that's another what if. Now, right now, the reason this is happening is people are concerned about the impact of any European problems upon financial stocks. Financial stocks are weighted the heaviest in the Russell 2000, in the small caps. So, financial stocks. So, the success of any strategy is dependent upon changes in price, and the Greeks for that are delta and gamma. Changes in implied volatility, which is measured by Vega, okay? And of course, we'll figure out why. Okay, I figured out how to do this, guys. Vega, and changes in time, which are theta, the days until expiration. Now, most of us know that theta is a constant, okay? But we can change theta by when we select a strategy, selecting a different expiration date, whether it be a weekly or whether we choose April, May, June. So the expiration month is important, okay? Now, as I go along, I'm going to ask if anybody has any questions. So please feel to interrupt me as we go along. Okay? So, but these are not the only things that affect it. The other factors, or as you sit there and you go, okay, this is my Greeks when I put it on. What are the other factors that could affect this? What if? Now, I use a term called seasonality to cover that. And I got that from, quite frankly, the futures market where I traded. And so, but I've changed it so it's more of a catch-all phrase, okay? And so what is seasonality? It's a repeatable tendency, meaning it happens again and again, of a financial instrument to move in relation to a particular influencing factor. And, gosh, when you come up with a definition, it has to encompass so many different things. It's clear as mud. So what do I mean by financial instrument? That can be an equity, an individual stock, an individual index, bonds, a commodity. And movement can be in the price of the underlying or the price of the options. An implied volatility is what tells us what the price of an option is. And it's a measurement of how much extrinsic value or premium is in that. So it's the overall price of the option. So if we go back, I look at everything saying, okay, price, implied volatility, and time. These are really the only things we need to know when we're looking at a strategy. Now, when I first started trading in the mid-80s, I had to worry about interest rates, which are rho. But with interest rates at zero or near zero, it's really a difference that does not make a difference. Okay? So, and people say, well, how can indexes have seasonality? Well, trust me, when Apple was 22% of the NDX, Apple earnings affected the anticipation of Apple earnings affected the implied volatility of the NDX. So here, sometimes a graph is worth 1,000 words. Here's an example of seasonality just in temperature by month. January, whoops. I try to click and use an arrow, but so you can see January, it's at its lowest in the middle of the year. June, July, August, it's the highest. And it's pretty well a constant as we go through. Okay? And we can aggregate it, okay, all the different yearly moves and collapse it into a year and set a mean, and you can go through there. And so you see that there's a certain pattern, okay? And I mean, so if I look at a pattern like that, I can say, okay, what's going to happen when it's cold? More winter coats are going to be sold. B, more car batteries will be sold. C, snowplow service. I live in the Midwest, and we go to hot. Air conditioning. Okay, there's lots of things that come along with just temperature. And so these are the things that when we look at individual stocks, we can start, learning. I mean, here's an example, temperature or snowfall, if we looked at that. I think that probably really affects Toro and snowblower sales. I mean, my local Toro place, I know, and the Ace Hardware, out in front right now, we haven't had any snow. Our biggest snow was a week ago, and it was nothing. If this is the time you buy your snowblower, I mean, in the heart of the winter, you're not going to sell lawnmowers. If we have a drought, you aren't going to sell lawnmowers as often because you don't need it. It's interesting how this works. So the things that affect seasonality, I guess you could call them factors affecting seasonality. I actually, as I thought about it, I'd say I call that a volatility event. Something that makes something happen, creates volatility. It either changes the price or it changes the implied volatility. I'll call that a volatility event. And gosh, everything I trade has that. And they're unique to specific underlying. Okay? Can be and when do these occur? It could be a time of year. Okay? It could be very simply a time of year. An example of that would be end of the quarter window dressing, end of the year window dressing to goose up prices of stocks. We know that people get paid on the performance of, meaning hedge fund managers, proprietary traders, get paid based on what they have or don't have. The money they've made and the makeup of their portfolio. So I was thinking, gosh, we're probably going to see a sell-off in Apple at the end of the quarter because people may be overweighted. So if you were sitting there waiting for it to go back up and recover, you would have said, hey, I'm going to wait, and then I'm going to rebalance my portfolio. But they rebalanced the portfolio on the last day of the quarter, which was last Thursday, and it went down. Now, did I make a trade based on that? No. Did I tell some people that's what I thought was going to happen? Yes. But when we trade the same thing again and again and again and understand how things work, certain behavior patterns, that's seasonality. Okay, earnings announcements. Volatility increases before earnings announcements. And I mean, when I say volatility, I mean implied volatility. Okay, it increases in anticipation of some sort of, we'll call it volatility event, which in the case of earnings is bad earnings or good earnings, but actually most often earnings that do not meet the whisper number. Okay, retail sales. Gosh, all the different things that we hear for reporting on retail sales, all the chatter that was going on this past year. How is pennies going to do over the Christmas sales cycle? What were the sales on Black Friday? What were the internet sales on Black Friday? Will Best Buy's new pricing carry them through, or be positive over the Christmas time? I mean, I remember growing up, it was always, Sears, Target, everything. Retail sales for back to school. I mean, at times they were looking at, back in the days of paper and pencils, Staples and Office Max 20 years ago. They would talk about that. We have planning and harvest, and you'll say, well, gosh, that would make sense for the commodities themselves, but what about tractor companies, train companies, railroad companies? And when there's a bountiful harvest, the train companies charge more, and they'll work longer in the year. The freight trains will be running longer. When it's a poor harvest, the trains do not do as well. We have fertilizer companies. In the old days, Potash and Mosaic. And recently, these companies will respond to the planning and the harvest times. You will see that. Barge companies do very well when the harvest is great. We can look at weather conditions, okay? Temperature, hot or cold, okay? If it's incredibly cold, it affects heating oil. If it's incredibly hot, it'll affect the sales for a Best Buy, a Sears, a Carrier air condition. Moisture, lack of or too much. If you have too much moisture, too much rain, you have floods. Well, look at what that does to insurance companies. Look at what a lack of moisture does to farm implement companies, heavy machinery companies, the railroads, the commodities, and hurricanes. This is something, and I'll show you something about how hurricanes can affect individual stocks. So, and there's more volatility events, and we've seen them lately. Political events, the sequester. Hey, we're going to roll back spending 10%. How does that impact the indexes? And there's an unknown there. The debt ceiling, and you can look at it, and that affects it. The election. Every 4 years when we have the election, you will see the indexes respond to it, okay? And you will see the indexes, maybe not so much the price of the index itself, the cash price of the index, but you will see it in the premium people are demanding to trade the options on the index. And elections, you'll see that every 2 years. I mean, we'll see it again when we have 2 years from now or a year and a half from now when we have our next congressional elections in the United States. Will it remain a Republican House and a Democratic Senate? Will one party take control? I mean, all these, the ebb and flow there, that will affect the price of the options you buy and sell, and as a result will affect the strategy, the success or lack of success of the strategy. Now remember, every strategy works. The important thing is every strategy doesn't work all the time. So as a result, we want to look at how a specific strategy does over price when a price goes up or the price goes down, how it does if volatility goes up or down, implied volatility, because every strategy is either probably long vega or short vega. So an increase in volatility can mean losing money or making money. Okay, here's an example. And we can start, this is Google, and it's Google for the past few years. We have price, okay. We have volatility, implied volatility is the blue, okay. Statistical volatility, or the volatility of the stock movement, is in red. And you'll notice there's spikes as we go along. And they're equidistant. Okay? One thing that I can be pretty sure of is that volatility, this volatility here, is the result of earnings. It's every 3 months apart. Okay? And it's pretty obvious that it's on a January, which is 1, April, well, that's June, okay, July, so that's 7, October, 10, it's at the beginning of the month, October 13 is January, which is 1, and then we go to 4, April, 7 again, July. You need to know this. When you're trading any options in a stock, you need to know when earnings are, because quite frankly, you don't want to sell an option here. Oh gosh, we'll go back. Okay. You don't want to sell a stock at the bottom before it peaks if it's expiring afterwards. And so right now we're approaching an earnings cycle. I had somebody say to me last week, well, why do I really need to know when earnings are? There's nothing happening this week or next week. Well, quite frankly, there's earnings. The week expiration this month in 2013, April expiration for equities is the 19th. If you look, there are a host of earnings that are occurring on the 22nd, 23rd, 24th, and 25th. And I'll show you some of those a bit later on. You need to know when those are. But there's also one notable earnings that occurs on Friday the 19th. Well, if you're going to trade an April option and you're selling it as premium, you need to know that that's going to happen. Okay? So you need to know when that volatility event or that seasonal, once every 3 months, earnings announcement takes place. Okay. Here's one, Cigna. I traded Cigna for years. It's an insurance company. Pretty good-sized insurance company. Higher end, if I remember correctly. Believe it or not, market makers, I traded this as a market maker, do not always know what stock they're trading. I've stood in pits with guys. I had somebody that traded in a pit where Cirrus Logic traded, and it was called Cruise. And there was a guy in the pit, and there are a lot of idiot savants, or, gosh, what would I call it? Learning disabled people, LD. I traded in pits where more than half the people were left-handed. And I don't know exactly what that says, but it says something. I would characterize these people as probably being high high ability, high learning disabled. I mean, it was very interesting. But here, we'll look at Cigna. Okay, it's February, March, February, May, August, November earnings cycle. So as we look, we can see November, August. You start going through there. May, there's earnings. But you'll say, okay, what's going on? Because there's other spikes that take place. Look at 2011. All of a sudden it peaks in August, and then it really doesn't go down. And the statistical volatility of the stock is jumping all over the place. Well, what occurs in the United States from the middle of August to the middle of October, sometimes the beginning of November? Hurricane season. This was a big hurricane season, multiple hurricanes. Well, when you're trading Cigna, you should know what are the economic events, the volatility events, the seasonal events that can make a difference. And I mean, we can see some of this jumping around. Well, actually, it didn't happen much, but we look here, and last season there wasn't much of a hurricane season at all. Okay? But if there's big floods in the Midwest, then it depends where their coverage is. And you can look this stuff up to find out where different companies have exposure. It's not predictable, but at least it's one of those what if. Knowing that is part of preparing your mind for what's going on. And here's how I keep track of things. I just took a cut out of a page of my Discover Options. If you look here, we have all these different things. The prices: Blackstone, Apple, Amazon, Netflix, Caterpillar, Facebook, and Force 5 Networks. I write down when earnings are going to be. So if you trade the Blackstone group, okay, wow, that's before, when I put 418 before, that's before opening, okay? Usually I put B or A. I did this just so it makes a little more sense for you, okay? All these are after expiration. So I know if I trade an April option, I have no earnings announcement exposure. The only way I would is if there's a pre-announcement. But that isn't, remember when my definition of what seasonality is? It said repeated, okay? So an earnings pre-announcement of bad earnings or great earnings, usually it's an earnings warning. It is not something that you can expect. But here's one, Facebook. It's before. And, it's reason enough maybe to steer clear of trading April Facebook options from the short side. Now, one thing you'll notice over time that the increase from the mean and the decrease from the increase from the mean implied volatility and the before earnings and the decrease to a mean implied volatility, it sort of approaches that. That magnitude is the same. So if we go back to something like, we'll go to Google. Quite often this magnitude, you'll notice it is pretty close to the same order of magnitude if we look at the scale over here. But geez, we're down to 15 now, and it goes up to 45. I mean, I don't know if you want to step in front of that train and sell this volatility, in May. Give it, and that's your call, but that's something you have. It's one of those what if. What if the volatility goes from 15 to 30? How much do I lose? Well, we have the tools in OptionVue that you can do the risk analysis of your system and change the volatility of a position. Okay? I'm going to take a break here. Any questions? I'm going to type it in. In case somebody is listening. Okay. It doesn't look like there are. Okay. The purpose of this is to raise, I'm talking about this, is to raise your awareness of the impacts of these events, volatility events. I don't want you to be in the position of saying, gosh, I didn't know that. And this goes back to, and I'm not done, but it goes back to people. There's no such thing as a dumb question in this business. I went and traded after, 20 years at the CBOE. I went over to the Chicago Board of Trade and traded wheat options. And it was because somebody offered me the opportunity. They provided the capital. I took the bulk of the profits. It was how arrangements were then. They took my trading expertise. I came in one day, and all of a sudden I got whacked. And the guy, and he sat at the desk next to me, who was backing me, said, how could you do that with crop announcement coming out? And it was my fault for not asking, are there any volatility events that can affect this position? By the same token, if he had said, hey, Frank, the Ag Department is releasing crop estimates on Wednesday. Are you prepared for it? Well, geez, no, I wasn't prepared for it. And, I might as well have just stood in front of a speeding train or, reached out and touched the third rail on the L. So it's important, and we have all been in the position of saying, God, I didn't know. I will still catch, before I trade any equity option, I'll look up and find out when earnings were. And a quick way, let's see, I'm going to share a screen right now. We'll see how this works. We'll go back. I'll show you one thing that I do. Close. We'll look at anything. Okay. We'll just pull up a stock. Any random stock here. VMware. Pretty big stock. I have no idea when earnings are. We have a column here in OptionVue that's called News. Okay, estimating is good enough for me. Okay, so what it's going to allow me to do is it brings up the news for VMware. I can go here and I'll look at SEC filings, and they'll say, well, what does that mean? Well, they do their 10K, generally comes out with the annual reports, okay? Result of operations. Whoops. That came out, that's a quarterly, January 27th. I can be pretty sure that VMware is coming out with earnings for 27, okay? And I'll go back and I'll look, and there's a quarterly report. October 22nd, there'll be something there. August 1st. So I start knowing that I know it's going to be the end of April or the beginning of May. Okay? That tells me right now, if they haven't announced earnings, that I probably don't have to worry about. It's going to be on this cycle, so it's not going to be April. It's going to include May. I call up, if I'm going to trade something, I can't find anything or feel uncomfortable, I'll call up investor relations at any firm. That's a good thing. Remember, chance favors the prepared mind. Okay? So, this is very handy for me to look at the news and to figure out what is going on. Okay? So, here, I haven't updated the Google information here, and that's my fault. But I don't trade Google, okay? But, so we'll go back. But so, yeah, keep it up to date if you're trading equities. Okay, here's another one, the effect of events. And I actually missed a pretty good opportunity to make money in the beginning of 2013. But if we go through here and look, okay, right here, mid-August, gosh, Frank, you think I would learn not to click on it. In mid-August of 2011, right there, that was the funding. It was the fiscal cliff right there, okay? And you'll notice that we also had a major sell-off in the indexes, another major sell-off. I mean, up, it happened, no, we're going to get better, up, and so you see this. Then we start moving up, and this is, once again, the fiscal cliff and the debt ceiling, okay? Now, the good thing is this happened while we were down low. But, I mean, this was all about the fiscal cliff. At the end of November, okay, in the beginning of December, this was all about changing the spending limit, okay? Right here we also had, remember, there was Eurozone problems thrown into that, okay? At the end of, so you can see where fiscal cliff and spending limits for the U.S. government made differences. This is all Eurozone problems. So, I mean, when we hear about Cyprus, this was Portugal, Spain, and Italy, this to do. You'll notice that here, at the end of the year, we had the fiscal cliff again, okay? What did I do? I basically said, well, I was here in short premium, I was here in short premium, and I was here and I was short premium, and here we're going the fiscal cliff, or sequestration, if you want to call that, or spending limits. All those things are happening at once. I'm going to watch on the sideline. Well, there was a nice profit made. I'm a premium seller, so they made a nice profit. But I didn't get hurt like I did here and on this crash and on this crash, because you'll notice how the volatility spiked. And so, you know, it's the what ifs, what ifs, what ifs. And at this point, at the end of 2012, I said, what if? Well, you know, what if it happens? Well, it's not going to be pretty. What if I don't have anything? Well, fine, I'll enjoy Christmas and the holidays, and, you know, I miss a nice payday, but you know what? That would have been the third or fourth time I had been fooled by this move. Chance favors a prepared mind. Here's an example of a season, and it's a seasonal pattern of heating oil over the past 20 years. And if you look, this is a price, and it's on a scale. It's an adjusted scale of 1 to 100. The highest price, you know, being 100. Okay, you'll notice a hot summer, it stables. Buying's done before the winter, and this is heating oil futures, what people buy, how they trade them. Okay. Somebody asked if the blue was statistical volatility. No, the red statistical volatility. We'll go back. Sorry to do that. The blue statistical, the reds, the blue is implied volatility. The red is historical or statistical volatility. Okay? Does that make sense? And I can go back and show you again. You know, here's implied volatility. Where the options trade is implied volatility. So you'll notice when it had earnings in August, and when it had earnings at the end of November, and earnings at the end of May, it peaks. Geez, Frank, you keep on doing that. Slow learner. But when they're worried about hurricanes and the damage associated with it, and the hurricanes are occurring. So here there was also hurricanes occurring. Okay, so the implied volatility was high, but the stock was moving around a lot, okay, which you can see right here. It went way down. Oh, God, it's horrible. We're going to get killed. And it went back up, and then it went down, and then it went back. It moved around a lot. So the historical volatility, the red, was up higher, okay? So, but heating oil, okay? But this is price, the gold's price, and, you know, most of the buying's done before winter, and if all of a sudden, if we don't have a lot of cold in the winter, if it's a warmer winter than usual, like last winter, price drops way down. What happened to natural gas a year ago? I think everybody can remember. I think it's gone up 80% in the past year. And a lot of that's a result because we had a non-extreme weather. Now, this is seasonality. You know, it stays the same. Okay, and this is March. Okay, stays the same. Then before winter, it goes up, and then it goes down. Okay. Here's soybeans. Okay. In February, it's usually quiet. Okay. The things that affect, I traded wheat. Okay. Originally, everything was dependent upon the U.S. growing cycle. Right now, for example, wheat. Australia is one of the biggest producers of wheat around. Soybeans. Brazil is a massive soybean producer. But right now, the question is, can they plant? Can they get the tractors in the field? Is there too much moisture? Will they bog down? You know, is it too early? Is it too late? How long's the growing season going to be? What's the temperature? How much moisture is in the soil from last year? How much rain is predicted in the future? And so you're going to end up with all these different things going on. Okay? So you have the planting. Last year, everybody thought it was going to be a bumper crop, and I can't remember if it was because I don't trade it. But I know there's certain crops where they got everything in. It was growing like gangbusters, and here in the Midwest, we had a massive frost. So if you were a fruit grower, and they don't trade futures on fruit, but they do trade, fruit prices went up significantly. I mean, apples were much more expensive. Apple juice was more expensive. There was a shortage of cherries, sour cherries, Michigan and Wisconsin state fruit. But I mean, but here's soybeans. So, you know, are we getting enough water? You know, what's the temperature? Will they, you know, so here, prices will go down if there's a good plant growth. If there is not, I mean, we keep on getting crop reports. How much was planted? At what stage are they? How many acres were planted? Okay? And then here's where they're harvesting, and they're starting to get a sense of what the true harvest amount is. Okay, the frost. So this is all supply and demand, supply and demand. Okay, so I didn't tell you how to trade these. Okay, and that's for another time, because quite often this how is going to be product dependent, whether it's an equity, an index, a commodity, bonds. I mean, this seasonality, this repeat occurrence of certain events is fairly common. I mean, you'll start understanding how FDA announcements for drugs affect companies. Sales of new products affect companies. So all of a sudden we have the BlackBerry. You know, we've seen the price of the underlying for BlackBerry or RIM, Research in Motion, and their options move around based upon the BlackBerry 10. So, you know, all these, the price of the underlying and the price of the options are affected by seasonality, and you need to be aware of it. When you trade something, just ask those what ifs, and it'll give you a sense of what could happen, what has happened, and if something happens, what the impact may be upon what you are trading. Okay? I trade the same set of products all the time because if I go to what's hot, the odds of me going, gosh, I didn't know that. Gosh, who would have thought? That doesn't happen as often. It's not like when I went into wheat options and the guy looks at me like I'm the biggest moron on earth. Didn't you know about the crop report? Well, not if you didn't tell me. And that was the equivalent of earnings. And, of course, the crop report said, hey, they weren't planting as much wheat or hadn't planted as much as they could because of rain, and they weren't harvesting the winter wheat because they couldn't get the combines out in the field. It was just a horror story, and I didn't know better. Okay, so as I said, know the potential volatility events, and with the potential to affect movement in the underlying. And I put that there twice because it's doubly important. In addition, know the effects of events upon price and volatility, and that's before and after event. So if you're trading an equity, know basically the magnitude of increase in implied volatility and the magnitude of decrease. In addition, if, for example, we have earnings in April for Apple at all, we know it's going to affect the May option, but how much is it going to affect the June option? And how much is that going to affect other options farther out in other months? Because there's going to be some options that are going to have two earnings events take place. So it's pretty important to know. So, hey, that's it. Here's a picture of all of us. Actually, this has been resized so many times that it looks like that you probably couldn't recognize any of us on the street. So, if anybody has any questions, feel free. I have plenty of time to sit here and answer any questions you want to ask about specific products, specific concerns, things that I might do. For example, when I traded equities, I was an equity trader on the old floor. I traded lots of diagonals and calendars because what I wanted to do was buy earnings month. And as we approached earning months, I wanted to create an inventory of the earnings month. And I paid for that as earnings month options by selling other things as we approached. And then as we approached earnings and came very close to earnings, I wanted to sell that month of options. And it was a strategy I did again and again and again. I did it probably 12 straight years in Wellfleet, and then, what did that become? Oh, Nortel. So, but yeah, you look for the presence of repeated events gives you the opportunity to perhaps make money using repeated strategies. Okay. So do we have any questions? Okay. Let's see. I'll type it again. Well, feel free to ask me any questions via email to Discover Options. I'd be happy to answer anything. Remember that there's no such thing as a stupid question, and in which case I guess it means there's no such thing about a stupid what if. Okay, here's a question. What about using the earnings search in OptionVue? Yeah, there's many paths to Buddha, Phil. That's a good idea, and do that. Some of the other trading platforms. Can you suggest how to get good fills on out-of-the-money verticals? Oh boy, a lot of that is. Are we buying that out of the money or selling the out-of-the-money vertical? That's a real good question. That's something where trading the same thing all the time helps. And now you're talking about selling. I know that I'll look at something where I'm buying out of the money verticals because I sell premium, and so I've sold I'll have an iron condor on, and I'll want to buy in what I sold. Okay? There's a certain point where you go, gosh, I buy it at 40 cents, and it seems like that there's, in the SPX, there can be a 20-point or a 10-point move in the underlying where that thing is always at 50 cents. And the question is, where can I really get filled? And so there's this, sometimes I think it depends when in the cycle, but at a certain point people will say, there's 42 days expiration. I'm not selling that for 50 cents, a quarter, 30 cents, or whatever. Would this be an opening sell or a closing sell? Opening. Gosh, there's an art form. Lately, there's so many things that enter into it. Lately, the liquidity has not been real good. Actually, it's been improving in options, at least options on the indexes. But, the closer months are better, the farther out months are worse. I think that weeklies have taken away some of the liquidity from the front months. So if you're trading April right now, and it has, how many days does April have to go right now? It doesn't matter. But the weeklies have taken away from the volume. Because whereas before, if somebody wanted to trade Apple, all they could do was trade the closest expiration was the April 19th expiring Apple. Well, right now, they have something expiring on the 5th and something expiring on the 12th. That takes away from the volume. It spreads it out more. So that makes a difference. Also, volatility has been moving around a fair amount. I mean, for example, the Russell Index, Volatility Index, RVX, has been up, I think 2.5 today, and it's up 1.6 right now. Well, there was a point where, I could have sold something and could have sold it for a good price compared to where it is now. And I was offering something, and I was, a nickel away, and now it's 40 cents away. Now it's an iron condor, but, and I can't say I was a nickel away because I was a nickel under the midpoint. It comes down to volatility, and this is where our experience goes. It takes place, but I got to walk it in and see what happens. But lots of times, if I can't get it filled, that just means I'm not supposed to trade it. Okay. Anybody else? Okay. Well, as I said, if you have questions, ask Karen, Ray, ask James Hogan, your salespeople. They'll forward anything to me. I'm pretty easy to get a hold of, and I'd be happy to answer any questions you might have. Okay? Thank you very much. I'll talk to you soon.